Welcome, everyone, to Global Markets Radio Week Ahead. I'm your host, Andrew Spanton. Sunday, April the 15th, 2012. Market's about to open. It's 4:45 p.m. Eastern Standard Time. Big news over the weekend, obviously, China increasing the currency trading ban to 1%. Still not enough. Comments from the Obama administration, Geithner. Still not enough. But it's a token as there's meetings coming up and the Chinese wanted to do something to avert being slapped, currency manipulator. So market's relatively unfazed. See the euro, it's actually opening down. Commodity currencies a little bit on the upside. Initially higher, but now coming back down to reality. I would think this is a positive. I would think this is going to be a positive. I would think the S&Ps might open up. But the fact that the market hasn't really opened up big on this news, I think is a good thing from a standpoint of dollar longs, risk off. Let me take a look at this S&P chart. We do have a big week ahead, people. Big week ahead. Lots of U.S. data coming out. Monday, tomorrow. Retail sales, I think, are going to be disgusting. I mean, terrible. Remember, a lot of retail sales earnings that came out from retailers really were not that good. And with the good weather, the previous months, which were better, took away from, let's say, this month. So up 0.9% on the core side, I could see a flat to negative number. So I think the market really gets drilled, if I'm right, as the U.S. numbers are not very impressive as of late. Michigan sentiment on Friday, not very good. So, and I think also some more European worries. There's big debt issuance coming out from Italy and Spain this week. Markets are very nervous. This is not going to go over well. I think the euro probably sells into it, and it's more of a buy on the news event. Listen, you know they're not going to go down without a fight. In my opinion, they're not going to, and they'll probably find a way to squeeze the auction through acceptable. You get a horrible auction where they can't really finance a lot of their debt, their yearly needs. Good New York Times article I posted on my Facebook page, really outlining a lot of the problem well. I can't believe I'm actually giving the New York Times credit for anything. So I think it's going to be a wild week. Let me start off big again. Monday retail sales, we get more. We get Empire Manufacturing. I look for that to be much worse. It was 20.2 last time. Market's looking for 18.1. Foreign flows of capital are going to fall off a cliff. Business inventories have been exploding. And the housing market number also. So we get some good numbers. Out of the U.S., we get minutes out of Australia Tuesday. That's going to be very interesting because the markets are thinking they're going to cut. Well, with that jobs number we had last week, maybe not. But certainly Australia, in my opinion, not doing very well, falling off a cliff. And then we look at these S&Ps. They look very heavy. We should get continuation, right? We broke, finally, the 3-week top. Closing, horrible. I think for sure we come into 1340 here. We try and test this low here. That's about 40. And notice that's right on the 20 exponential moving average. So that's about another 30 handles in the S&P. If we gap up, I would take that opportunity to sell. And the market's S&P is open at 6 p.m. Eastern. I would imagine we're probably going to have a pop on the open, people. But again, markets are not opening up very well. I think there's a little bit of disappointment. Jim O'Neill, the big bull out of Goldman Sachs, of course, had to say this is good. This means China is going to have a soft landing. Please. If you think about it, they're now allowing $80 billion a month, I believe, in investment in China. That's the biggest sucker play ever. They're propping up the housing market. They've been propping up asset prices, and now they're going to let foreigners buy at the propped up prices. I got a bridge to sell you if you want that. So You could certainly look at this in a number of ways. China's desperate for people to invest in China, so they're allowing you now to invest. So I don't think this is necessarily as good as the market and people think. Obviously, yes, if China was doing so poorly, they would not be doing this, but still, 7.5% GDP out of China is not great, given the last 3 years that we've seen. It's been steadily going down every quarter, China GDP. So S&Ps, I look to them to come in hard. Again, I think U.S. numbers are going to suck. Big numbers out of Europe, CPI, German ZU. You would imagine those numbers look to come in. I think we're heading for more of a deflationary environment. Commodities have been coming in a little bit. But as global growth slows, I got to believe deflationary fears are going to come back into play at some point. Building permits, housing starts, Bank of Canada on Tuesday. UBS actually thinks they might raise rates. What are they smoking? Please, pass it over. It must be good stuff. I mean, how are these guys paid the kind of money they're paid and they're always wrong? Not always, but you know what I'm saying. It's a joke. The global economy is not doing very well, but yeah, Canada's going to raise rates. Okay. Incredible. So again, these S&Ps look like they're going to come in more. Let's look at the dollar index. And again, we got lots more data coming out this week. And again, the bond auctions, Italy and Spain, Tuesday and Thursday. That's big. That's more important than any numbers, especially for the euro. We got unemployment numbers out of London. That should be interesting. The minutes coming out of London as well, that should be important. Bank of Canada monetary policy report, this is all on Wednesday. Nothing out of the U.S., crude inventories. But when we look at this dollar index, remember, we're looking at weekly charts right now, and we look good. This looks like we want to try and break out, in my opinion. And you really have these nice wedges I'm seeing all over the place. And that says to me, momentum, coming. And I think we can make a run. Break out a little bit, get up to 81.75. That would mean the euro down well under 130. But this Dixie, to me, as long as we don't break under 78.90, 78.75, it's a long. That should mean risk off, baby. And gold looks terrible, in my opinion. Yeah, we came back nicely last week a little bit, but we reversed on Friday nicely. And I think as long as gold doesn't get above 1,700, I still think gold is looking like 1,500. Easy. I mean, look at this. So toppy. 1,700, really the ultimate is 18. We get above 1,800, gone. And, a lot of people saying, Bernanke, no bullets. He's not going to do QE3. And 2.5 is enough. 2.5, remember, Bernanke's investing all the coupon payments from all the treasuries that they own back into the mortgage market, thus keeping rates low. So QE 2.5 is ongoing. The Iranian situation, no developments in my opinion, really. It's stalling once again. Obama letting them buy their time, keep producing nuclear devices, nuclear weapons, missile technology. The more delays, the more Iran continues to enrich uranium to weapons grade. So, but again, look at this in crude. It doesn't look very good, although nice little hammer. But again, the news, they got their second round of talks coming up, and it's relatively decent from an oil perspective. Certainly no real bad talks, no breakdowns, no bad rhetoric out of Iran saying U.S. is an evil empire, stuff like that. So let's get to the currency market. Obviously, that's our focus. Now, again, the reason why I focus on the S&Ps, it's so important. If the S&Ps are going to really come in, the dollar is going up. So you must have an opinion on the S&Ps if you're trading currencies. No ifs, ands, or buts. I didn't want to hear it. I'll tell you that woman on the CNBC currency report on Fridays. Who is this saying buy the Kiwi? But doesn't say, well, if the stock market comes in, watch out. Yeah, okay. Good call. Not even mentioning the reversal we had on Friday. Oh, baby. That Kiwi looks gorgeous on the daily to the downside. Eurodollar weekly chart. Once again, this 130 is huge. We break through, it's over. Say goodnight. And again, I highly recommend reading that New York Times article. Toast. Bye-bye. Sayonara. But we really got to break through this 130 level in that zone. Even take out last week's low, previous week, 130.20. Muy malo. And again, that opens the floodgates. Certainly back down 127-ish, 127.50. Euro yen, big week down last week. Continuation from previous week. Looks terrible. Closing below all these support. The support here, back this candle. Not good. Do your Fibonacci on this euro yen. All the yens look the same. And we're talking 104. Easy. And then the golden retracement, 61.8 at 102.60 on euro yen. I'll check out Euro Canada. Looks like it wants to melt, but weekly doesn't look that bad. Could futz around because dollar Canada does look good to the upside. Trying to break out. Again, Bank of Canada. Raise rates. I tell you, I just can't get over how these guys make millions of dollars, economists at these companies. It's just incredible. Telling you. Pass it over. I need some. But look at this weekly chart again. I think it found a level. As long as we don't break through 98.50, it looks to me like this baby could really rock it. And again, now that people think there's going to be a rate hike, you would think the Canadian dollar might be a little bid going into Tuesday. And then bang, disappointment. Say bye-bye. Thursday, big number also for the U.S. Existing home sales, Philly Fed. We get German IFO on Friday, German zoo and IFO coming out this week. Big. And we get IMF at the end of the week. And again, that's why China did what they did, in my humble opinion. No U.S. numbers, but big Friday, big stuff. German IFO, London retail sales, CPI out of Canada. Look for that to suck. It's been running a little hot lately. But again, look at this dollar Canada. It looks, I mean, yes, it's a shooting star. You know, yes, you got your hammer, you got your shooting star here. So I call this my propeller pattern. You know, unless we take out 99.40, I think DC, dollar Canada, is a long. Dollar yen looks terrible. FXCM, SSI, they're all long. That's a good thing if you're short. Big time. 79.50 continues to be my spot. 79 is the golden retracement. But certainly the 50% at 80 looks to be big. So I think dollar yen is a sell on any strength. Absolutely. Dollar Swiss. Oh, not Nokia. I mean, Kroner. I don't know what that is. Dollar Swiss. Looks good. Weekly chart looks good. Again, trying to break out of this little wedge. I think SSI can be very reliable. Very reliable. Might not be right away for an intraday trade, but I think SSI gives you a good picture too. You know, watch out. If everyone's long one way, I think you got to be the opposite. And you look at this dollar Swiss, it's ready to go to the moon. A lot of people trying to be long Euro Swiss after it broke the 120 and now held, maybe. But I could see a nice little pop-up, maybe if it's 94.50, 95. Why not? But again, risk off, stock market down, dollar up, get long. Short, get long the dollar. Another failure in London. Pound. Should we take out previous week's lows? This 158 level is big. We breach that, floodgates open up, baby. Every dog is their day. But again, should we break through this 57.50-ish? Not good. And again, some of the other trades, sterling yen. Rolling over. Another one. We're not even close. 127.10. 125.20. Big spots. Oh, boy, market's opening. Charts are going to go down. All right, well, we made it this long. Pound Aussie. Yes, it looks terrible. Yes, it looks like it's rolling over. But if I'm right about risk off, this baby's going to head right back up. Definitely not a good-looking candle. Outside candle. This does not look very good. Looks like we might come in a little bit more. But I think we come in and we reverse. Again, I'm looking for the markets to be down nicely this week. Nicely. Numbers are going to suck wind. But this outside candle scares the crap out of me. Absolutely. But again, to have the stock market go down and this baby to go down has not been the play. And again, you look at this long-term chart. I mean, come on. But certainly Pound Aussie is sort of due, to come in a little bit more as we had that reversal. Big time. Pound Kiwi looks a little different. This one looks like it may have, come in a little more, but then we reverse up. And again, these are risk-off trades. Nice little double bottom. I think you buy the pullback on these trades. Absolutely. I ain't buying it. Maybe the stock market reverses, and if it does, these things will be nice shorts. But until the markets reverse, until you see the whites of their eyes, I still like these trades on the long side. Risk off. Aussie dollar. Weekly chart. Inside week, although we did take out previous week's low, we did not take out previous week's high. I am still bearish on this. Yes, we have one good number. Big freaking deal. And we nailed it. Right? We nailed it. But I'm still very bearish on this. Again, if the market's going to drop more, this baby's going to come in nicely. Kiwi. Gorgeous reversal on Friday. Weekly chart doesn't give it justice. But again, if we look at the daily, just this one will do. Look at that nice reversal. Bang. Ooh, mama. Break it out to break it down. Sucked everyone in, and that stupid woman on on fast money currency trading on Friday recommend buying this. Man, this is such a risk-off trade. If the stock market comes in, this baby melts down. Again, look at the correlation. S&P, same thing, right? Look where this is compared to where the S&P is going. And is. So this one has more catch-up. Absolutely. It has no business trading here if I'm right about the S&P. And that's it, people. Again, big week for numbers. Big week for events. Big week for a lot of stuff. And I think the euro cracks. This is the week. Absolute S&P's crack. This Aussie Kiwi monster week. Made a nice comeback, but what a meltdown on Friday. Holy crap. But look at the weekly chart. I still do like this trade. But again, with risk off, see, it's still doji. and they're selling that Aussie, look out below. And again, this hit our channel line here. We've been talking about this channel line for a long time. And that's 124. Wait, hang on, not perfect. Around 124.75. So it still looks like it's got more to go on the downside. And that should mean Aussie continues to underperform. And again, big numbers this week. Eurozone, Germany, London, Canada. Oh, baby, even Australia. Quarterly business confidence on Wednesday, Thursday, their day. The minutes. We had New Zealand house price index a little bit better at 1.9%. Other than that, really not much out of China this week and not much out of New Zealand. CPI on Wednesday is the biggest number. And that's it. Big one, unemployment on Thursday. That's going to be big. You get another bad number. Gold could have a big pop on that. Again, everyone, feel free to email me, info@globalfxllc.com. Try my product. 1 week free trial. Oh, baby. Bear markets, you need me. Especially if you don't understand the correlation I keep talking about. Then you got to try my service just to learn. 3 months with me. Spring special. Only $400. And remember, Premium Junior, for $50 a month, you get research like from Goldman Sachs. I send out good stuff. Other research that costs money to get. Newsletters. My tweets, premium. Not Voice of Forex. My premium tweet. My daily trade recs. Only $50 a month. All right, everyone. Have a good week. Hopefully you do well on Thursday, Friday. Hopefully you're rested. Ready to rock and roll. I thought we were dead. I'm short the Aussie and Kiwi going into the weekend. I thought we'd be dead, but we're not really. So that means we probably got them. And again, retail sales tomorrow, disaster. Andrew Spanton, Global Markets Radio, the only voice you'll ever need, who truly loves to make you money. Bye-bye.